Good afternoon, traders, and welcome to this week's weekly market analysis class, Monday, the 16th of April. Before we get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, let's have a look at what's happened last week. Let's have a look at what's happening, things to note, and let's see how we can try and navigate our way through this week's data. Starting off from the US, last week it was a week which was very much dominated by the geopolitical tensions. Basically, by the end of the week, a lot of that eased off as Mr. Trump toned down his talks on China's tariffs and asked about looking at rejoining the Trans-Pacific Partnership. Also, they're very, very close to reaching an agreement on the NAFTA deals, so that has also aided that situation there. In terms of data this week itself, we have retail sales which are happening tonight at 10:30. We also have building permits tomorrow, and then we have crude oil inventory. So in terms of data for the US, it's not a heavy week. Probably retail sales tonight and building permits, the ones that will impact and affect the US dollar the most. We look at the GBP. GBP has actually been one of the most resilient currencies last week. It came within a few pips of that critical resistance level of 143, so it's on the verge of that. Will it break through? Will it not? Key data this week will basically dominate, where we have the average earnings index, we have the CPI numbers and retail sales all due out this week. And given that recently the GBP has not produced strong data, or the data has come in softer than expected, and investors have been holding faith with the currency, making it resilient, as I've just mentioned. These data releases this week will become more important as investors look for further evidence of deterioration, or was the previous soft data just a bleep on the screen. So there you have it. So GBP, look out for those ones this week. If we turn our attention to our own Aussie dollar, we have, in terms of data itself, we have the monetary policy meetings, which are due tomorrow, and we have employment change numbers later at the week. The employment change numbers are and can be quite impacting on the currency. We also note that for the Aussie dollar, we were trading in a tight range, and we broke out on the high side towards the end of the week, and that was mainly a benefit that we received from the trade war tension calming down, as I mentioned at the start, with Mr. Trump easing off with the tone on the China tariffs. As we know, if China is healthy, basically it helps and assists our own Aussie dollar. Turn our attention to the Canadian dollar. Well, last week it started fairly strong, as we saw the US CAD drop significantly. That was all due to Canadian strength. And later, towards the end of the week, as it became clearer that a NAFTA deal would not be finalized at the summit in Peru, well, then it started to stabilize a little bit more. This week is a big week for the Canadian dollar. We have a monetary policy statement report due on Thursday, and the rate decision as well. We are not really expecting any movements in rates. However, on the policy and the statement, we are specifically seeing what the tone of that document or that speech is. At the last meet, they turned from what they were fairly aggressive with a few interest rate cuts late last year to a much more dovish tone. So we'll see what comes forward out of that, and that will have a significant impact on any direction. Also, retail sales are due on Friday, as I'm highlighting for you there. Finally, as a result of all this data releases, I believe the US CAD will be the currency that will be the most likely to be affected strictly by data releases itself. So if there's any US CAD traders, please look out for that. In there as well was the oil inventories, which is a specific data which affects the US CAD almost directly. As always, guys, the times that I'm showing you are in my local time, which is Australian Eastern Standard Time. Please note, daylight savings has ended, so everything moves a little bit more closer to us. London opens a little bit earlier during our winter, so please take note of those. All right, if anybody has any questions, please paste them in, type them in now. I'll be more than happy to address them. They can be off topic. I'll try and incorporate them as I work my way through the analysis, and let's see what the markets has in store for us. So let's kick off and let's have a look at the Aussie dollar. We'll kick it off with the Aussie dollar. All right, give me one moment as I prepare my tools. What do we have here? Whenever you do any analysis, guys, look, I always try and bring in off-topic things and try and make this more than just an analysis class where I can talk a little bit about strategy where it fits in and try and incorporate everything. A handy tip is whenever you look at your charts, any line markings that you make on your charts or any drawings that you make on it, it's a good idea to leave them in there because then when you come back and look at that chart instantly, you can see what you were thinking, and secondly, you can see how well your lines have been drawn, and if what you thought was a possibility, is it playing out or is it not playing out? So when I look at this chart here straight away, it's very clear to me that I'm trying to track this falling channel. And on the bottom side, I've got one touch, I've got two touches, and I've got three touches down the bottom. I've got one and two over here. So technically, how many touches do I need? Just a bit of trivia. How many touches do I need for it to be a valid channel? Anybody? If you are, there's quite a few amount of new people in the class. So if you can, for those of you who are newer, the more you interact with me, the more interesting the class is for me. I won't fall asleep on you and you'll get more out of me. So if you don't know an answer, just type in a question mark. Otherwise, try and have a go so that it makes it much more beneficial for everybody. The correct answer is 2. We need 2 touches at least on both sides. So occasionally, and I had a couple of examples of the daily call last week where we had 2 touches on one side and we were approaching the second touch on the other side. Technically, that's still not a confirmed channel because, for example, if we look at this one right here, we can see that this was the first touch. There was another touch there over here. Now, at this point over here, this chart could have continued to just go straight through that level and therefore it would not be a touch. So if you were attempting to trade off that level, that's what I normally call an aggressive attempt. Now, if you've got some really nice price action and you're a little bit on the aggressive side, I can understand you attempting that. But otherwise, the first official time that you could attempt to trade this would be over here somewhere. Once you've already got the 1 and 2 touches on both sides, it's a confirmed channel. So somewhere over here, you can attempt to trade it in that direction. So looking at this chart right now, it's pretty obvious what I want to do. I want to wait for it over here somewhere, and then I am going to attempt to trade it back down in this direction. Pretty straightforward, this one. There is nothing else that I'm interested on this particular chart. That's the only thing that I'm looking for, and it could happen this week. We're not too far away, so definitely add this one to a hot list or a watch list, whatever you want to call it, so that when it does happen, we don't miss out on that one. By the way, the falling channels, any type of channel, are my number one preferred, and I don't have official statistics on it, but they seem to be the highest probability setups that I come across. Okay, all right, so there you have it. Aussie dollar, we're waiting for approaching the perimeter, and then we're looking to short. Euro USD, okay, again, you can see markings on my chart. Let me just zoom out a little bit. I want to see what's happening here a little bit better. Okay, the reason that I zoom out so far is basically what I'm looking at specifically is there's a big empty space all the way over here. After the market moved through here, I know that's a long time ago, there was that big drop straight down. Usually a big drop, big movement like that all in one go signifies obviously there's much more sellers in the market than buyers. But what it also does is it tends to clean up all these orders, any stop orders that are on this side of the market. They get triggered and they just get taken out of the markets, which basically means it's kind of like empty in the bag. There's nothing in there. So whenever the market comes back into that area, I always look for this empty space. It just helps me understand the market, how many buyers or how many sellers may still be in there, and what the next move may be. So you'll see we're going upwards in precaution, and now we've just started to home in on this little tight area. Let me zoom all the way back in and let's see what's on offer for us. The most likely, this, see when I'm zoomed in close, you can't see it as often, as easy, but from here, this pattern, the most likely scenario for this pattern is this. This is how this pattern works. Okay, that's what, if there was a textbook, that's what the pattern would look like. All right, so it would be a breakout trade. I don't know how many breakout traders are in here in the room. Let me zoom in. So if you wanted to take advantage of that, what you will be looking for is you want a candle that looks something like this. Obviously it'll be a green candle, it'll be a very bullish candle. It would be great if it clears that high, and then if it does at the open of the very next candle, you would take that trade as such. So that's what you're specifically looking for if you're trying to trade that breakout. Should it not happen and we get a little cluster here or a little inside candle pointing back in this direction, as long as you have enough room, okay, and this is very important, as long as you have enough room to hit your targets before you get to this line, well then that would also be valid as well. Okay, so that's a really nice pattern. I'll be honest, I haven't done breakout trading for a while now. It's got to be easily a solid year, maybe more. I used to do a lot of breakout trading. It doesn't suit my psychology. Okay, so I'm the first one to put up my hand. So if I know that it's a little bit of my weakness, well then it's just easier for me to avoid it, and I can find plenty of other opportunities with other methods. But for the nature of the exercise and the analysis, that is a classic breakout setup. Let's move on. Let's have a look at the US yen. Okay, let me zoom out a little bit and let's instantly, the first thing that I want to do is, okay, so obviously there's a breakout, there was a congestion, we broke out, we're coming back, we're very close to that level there, which typically can mean, okay, can mean previous support can now act as resistance and provide us an opportunity in that direction. So let me, with that information, let me just adjust these lines. Let me see it a bit better. Just trying to grab a zone. Zoom in now. Okay, so if this one sets up, I need to see it on the day. Okay, so what will happen is if this one sets up, let's say I get a candle like this right here, I need to see it on the day. I need to see how much time has taken for that to set up. Does it set up immediately right now or in 7 candles time, etc.? When I see it, I have a better indication, and I will, if I see it and I like it, it would become one of my daily call charts of the day. So it's the only, I can't, looking at it right now, if it was to set up right now, I'm not 100% sure that I like it. I need to see what kind of candle pattern, and what's actually spoiled it a little bit is this candle has already come down. This current candle has come down lower than than Friday's candle. I would have preferred this one to stay above it and set up off this candle for tomorrow like that. So then it's looking better, and then for the shoot in this direction. So for right now on this one, what we're going to say is we're just going to leave this one alone. Okay, so US yen, we just got it on alert just to see what happens. Let's move it along. GBP USD. Okay, GBP USD, take note, we had 1, 2, 3, 4, 5, 6 consecutive days in one direction. They're not the cleanest. This candle was barely a positive candle, but it was. Okay, but what I'm interested in here is when there is a resistance point. There's a resistance here. It's clear. The market's come once, it shot off. It came back straight away, shot off again. Came back a third time, shot off again. We are there right now again. So one option is we can look for price action straight away. Okay, if we get it, let's just jump on it. The other option is if we don't get price action, what we're looking for is, this would be the sixth candle, the current one right now. If we get a big breaking candle like this, and it happens to be the seventh candle, okay, that would be 7 consecutive days in one direction. Then on the 8th day, we can take a short-term reversal. It's not a complete, I'm not saying that it would go down all the way to here. For those of you who have traded this method with me in the past, we seem to get good success rate out of them, because it's only a small temporary reversal. Okay, so if that does happen, I will flag it. But what we can do straight away is let's just draw a line in here. Okay, and let's see if we can get price action out of these two candles to shoot us in that direction. If today's candle makes a higher break, well, then we've got to wait for one more candle tomorrow, and then we would attempt it as such. Is that clear for everybody? Everybody understands? Does anybody have any questions? No, we're all good? Okay, so that's our GBP USD plan. Let's have a look at gold. Not loving this chart. I'm just going to draw a line up here. And what I'm trying to grab, just so that you know, is I'm trying to grab a high from up there and bring it across just so that I remember where the high is. And now we can see that we've come close to it a couple of times, and it seems to be shooting off. My gut feeling with this one is that it will break straight through, and then it would be the breakout trade, which is probably going to show up more than another reversal in the downward direction. Let's just wait and see. So what I'm basically saying, let me zoom in, see if I can move this. I get the feeling that we're probably going to get a candle that goes like this at some point, breaks that line clearly, and then that's the signal for on the next candle to continue with the momentum. Now, should that not occur, if it doesn't happen, that's okay. We're not losing anything, and we get this type of situation like that, then you can attempt it back down. That would be both legitimate reasons to to be able to take that trade. Okay, so there you have it. That's the only thing that's available on gold. Okay, I've got a question. How would I work out profit target on the GBP USD? Let me go back. Okay, for the breakout trade, Meredith, or for the short, because they'd be different. That one or that one? Which one? The short or the long? The short. Okay, the short's easy. So let's. I'm going to zoom in really big and just to make it easy. Okay, let's pretend that we get the setup that we're looking for. Let's say it looks like this. I'm just going to draw it out. I'll do it all graphically. Okay, let's pretend we get a green candle like that. Today's candle is like that. Tomorrow we get a candle in the other direction and it forms an inside candle. My trigger or my entry would be at the break of the low, which would be there. So this would be my entry, like that. My stop would be placed above the high of the two combination, which would be up here. So that's my stop. Okay. And then whatever this distance is here, typically for this type of trade, I can attempt to go for 2 to 1. Now remember, in all the courses that I teach and talk to you about, I always provoke you to make a decision on what you want to do at the 1-to-1 ratio point. So the 1-to-1 ratio point, so just so that you understand, if that's that distance there, this would be the 1-to-1. I'm doing all this graphically, okay? So you can physically measure out how much in pips that is, but I'm just doing it graphically on the proviso that the two candles were the ones that I've drawn in. So that would be the 1-to-1. Now, if you don't want to do anything at the 1-to-1, that's okay, but make sure it's written inside your trading rules. And if you went for the 2-to-1, this would be my target down here. Now, just so that you all get a bit of an idea, in the daily call, the trades, every trade that I take that I've been posting up and documenting, what I've been doing is when the trade reaches the 1-to-1, I am closing 50% of the trade and I'm grabbing the stop and moving it to the entry point so that it's break even. Okay, and I'm leaving the second half of the trade to attempt to reach the 2-to-1 level. Okay, hopefully that answers your question, Meredith. Another question, a couple of questions just popped up. Give me one moment. Lois, is your question relating to the GBP USD? I think it is. Give me 1 second. On gold. Okay, thank you. I'll move to that one. Okay, moving to gold. Give me 1 second. I'm just trying to answer one question. I just got to figure out the line that I'm looking for. Okay, the question that's been asked now on gold, I was zoomed out and I just drew a line right across the top because I wanted to see where that high was. Let me get rid of that line. And the question being asked is, can I draw a line off the top of this candle like this? Okay. Let me just try and fit it in a bit better as best as I can. So let's see what it looks like. So can I draw a resistance line there? What do we think? I'll ask the class. Do we like this line? Yes or no? If you don't know, the correct answer is Question mark? Go for it, guys. Give me an answer. I'll give you the answer in a moment. Okay. Most of you have got the right answer. The answer is, yeah, that's okay. The reason why I went back and had a look back just to see if there was something significant, and even this point here is nearly at the same level as that line. It's very, very close. But that was a while back. Like there's a fair bit of time that's gone by there. So yeah, so I'm happy with that line there. So if we want to trade off that line, the only reason that I wasn't looking at this line, let me go back and let me just draw the other line. If I draw that line, let me bring it down a little bit. See the top line that I've just drawn in there? The only reason why I wasn't looking at that is because I just get the feeling, I don't know, maybe I've just been looking at charts for way too long. Get the feeling that the market shot off, shot off, shot off, shot off, shot off. I think it's exhausted. Okay, when it shoots off this many times, I just get the feeling. Let's say if I'll ask the question right now, if you were short gold right now, where would your stop be right now? Where would you have your stop? If you were gonna, if I was forcing you to sell into this chart, where would you place your stop? Okay, great. Karen, Paul, yes, just above the top line. So if you guys are thinking that, and we represent a significant like-minded proportion of the market, all the people that have been in this trade, okay, who are willing it to go down, all their stops are over here. Okay, so there must be a huge stop build-up. When there's such a huge stop build-up, what can happen is all it takes is one little bit of candle to go through that, start to trigger through all those stops, and then it just shoots off really quickly and then may come back down. Okay, so this is the reason why I'm a little bit reluctant to look at the price action bounce, because it's already bounced many times off this level, and it's probably more likely that it will break straight through than the other way. Okay, so in summary, let's leave this chart alone, as it's a little bit trickier to trade. It's not as straightforward as the eye sees it, and that's why you need to look back. So if we come next week and we see this big shooting candle through it, it'll make a little bit more sense. Okay. All right, let's move to the US CAD. So this is the one that I said is going to be the most susceptible to data. Okay, now this looking like a nice chart here. I've got 1, 2 nice touches, 1, 2 very, very nice looking chart. If this comes down to here, there's only one thing that I'm interested in, and it's that. Now again, remember, I will not trade off the line itself. I still need price action confirmation. Every time I draw a little circle like this, what that circle means is I need the correct price action candle pattern inside to justify the trade back up the channel. Okay, pretty straightforward. That's all I'm interested in. US CAD, I'm interested in buying when I get the confirmation at the perimeter. Oops, wrong button. Okay, let's have a look at oil. Okay, remember this would have been a couple of weeks ago. If I've got this line drawn in, see this is typically a converging pattern. So it played out. Look, it broke out really nice. And typically the profit that you can expect out of these type of breakouts is normally I don't go to the first touch, probably the second, or not the first touch on the furthest distance, the first touch on the inside one. So, and just draw out a line about like that, and then from where it breaks out, draw out a line about that, and that's typically what you can expect as a target level. And you can see here we've reached it. All right, so this was something that played out nicely. I didn't trade it, but there you have it. So let's get rid of these lines now as they're no good to me. Let me zoom out a little bit. The double top is already played out as well, so that's not in no interest. Okay, this looks to me like a rising wedge. Okay, question. Okay, yes, no, or question mark. Everybody answer, please. Am I allowed to attempt to take a trade there? Yes or no? In this direction. Okay, interesting responses. Actually, it's only two people that got this answer correct. And by looking at the names, no surprise, these guys have been with me for a long time. Paul, Karen, you are both correct. I've just drawn this line in right now. Okay. First of all, is this line confirmed? Yes or no? No, it's not confirmed. What happens if this just keeps on going up there? Then in reality, I should have grabbed this line and drew it up there. Okay, so before we can draw a line, we need at least two confirmed touches, and the only way I can confirm this top touch as a touch is I need the market to move away. Okay, and then when it comes back, whether it comes back to here or wherever, whenever it comes back, only then I can say yes, that is a confirmed line, and I can attempt to trade off that level. The only times where I will aggressively trade the second touch is only when it is a channel, because channel has got parallel lines, okay, which basically means there's already three other points of that 4-point channel which have been confirmed, and the probability is a little bit higher. So with a channel, yes, but not with a wedge, because a wedge, you can clearly see that my top line is not parallel to my bottom line. Okay, does that make sense to everybody? Because it's very, very important. This is a very, very common question error that people make. They'll apply something in the wrong space, and you need a correct line to start off with. So what I'm going to do with oil is I'm just going to leave this line marked in. But what might happen is next time I come and have a look at this chart, all the price might be above it, and I may have to readjust the line, or it may be down here. And then if it does come down at this point over here, definitely I'm in a position to attempt a trade. Okay, but where we are right now, the answer is no trade, not yet. Okay, Matteo, a question's been asked, why can I do it with a channel but not with a wedge? Let me go to a channel. Let me go back to the US CAD had a channel here. Okay, with the channel, okay, these two lines are parallel. They have to be. Okay, that's a definition. So if I lock in a level here and I lock in a level there, okay, so these two levels are locked in, and they're locked in because we saw the market move away and we saw the market move away. So is everybody 100% understand that these two levels are locked in? Yes or no? Please confirm. Okay, it's very, very obvious. These two levels are 100% locked in. Now, because these two levels are locked in, it also locks in this line as well. Okay, at least the gradient of the line, because they're parallel. So it locks in the top line. Now, once we have our one confirmed touch, so if we count them all in a row, we go 1, 2, 3. At this point over here, it could continue to go up and it's incorrect. However, because the lines are parallel, there is a higher probability that it could act as a channel. And yes, I would accept an aggressive, big A, and it's still an aggressive trade to attempt to trade it in a downward direction. Okay? Otherwise, if you don't touch that one, the first time you can trade is only down here. Does that answer your question, Matteo? Great. Okay, so back to WTI. This is not a channel, so I cannot trade off that level. All right, let's move on. Let's have a look at ASX 200. Ooh. Okay, ASX 200. There's what I want to do is I want to try and draw something across there. If the market comes up to meet me at that line, I've got 1, 2, 3 touches. I'm happy. I might attempt to trade it there. Okay, it's the only thing that may play out. I'm not sure. But either way, trade what you see. So if the market does come to that level, then it's a valid trade. All right, so that's the only thing available for the ASX 200. Last but not least, the Kiwi Dollar. Okay, let's extend my top line and let's see if the Kiwi Dollar can come to this level, give me the price action so that I can attempt to trade it on the downside. Okay, so that's pretty much on the cards. Add that to your list. I'll remove the bottom line. I only had it in there just to help my eye, but it's the top line that I'm trading, and it is a confirmed line. We got 1, 2, we got 2 touches. So if we get to this level, yes, I'm interested in taking a short on the Kiwi Dollar. Again, I will not trade purely off the level. I still will be looking for some kind of price action confirmation. All right, let me go back and summarize what we have seen. If you have any questions, that can be off topic, that can be anything else. You want me to look at something, please type them in while I recap, and then I'll come back and address all those questions. Aussie Dollar, we have spotted a new channel, and let's see if it comes to meet us, and we will be interested in our first trade off that channel. Euro USD, we are in a converging triangle. If there is enough room at the top, we can trade back down. If not, the breakout trade is on the cards for that one. US yen, we've got an old level of support, which may now become new level of resistance. However, this was a little bit tricky. Add it to your watch list. Look out for this one on the daily call to see if I actually pick it up when it gets there, if it gets there. GBP USD, we are at a critical level. We're looking for price action. If we can get it, we will be sellers in this market. Also, for the breakout trader, look out for the nice bull breaking candle, and then that will set you up for the other side. Gold, we spoke about gold in depth. We still got 2 levels. We're just going to leave this one here. Let's just see what happens. US CAD, we are looking for the market to come to us at the bottom of the channel, and then we'll be looking at becoming buyers. Oil, we are just tracking what may become a rising wedge, but there's nothing on the cards right now. ASX 200, we've spotted a top resistance line. We've drawn it in. Let's see if the market comes to meet us. And finally, Kiwi Dollar, top resistance. We're very, very close. We could get a setup off this one this week for sure. All right, there you have it. That's the analysis for the week. Any questions, guys? I'll give you a moment and then I'll start to answer them. General question being asked. The question is, with price action, can I apply it to 5-minute charts? Okay, there's many different views on applying this kind of method to smaller time frames. Okay, now in the live workshop that I do, which basically I spend all day with you, I go into the full details of why price action works and what it actually means. Price action is essentially the behavior or the study of price movements, which is essentially the psychological behavior of every participant in the market. Now, an inside candle basically, in terms of psychology, means that the market has traded at a lower and higher price than the previous has traded in a narrower range than the previous day. Now, psychologically, when it means that the market's starting to put pressure on itself, and then the likelihood of a breakout can be significant. Now, it tends to work because it is when we look at a daily candle, we are looking at the behavior of an entire day, which means it's capturing every participant in the markets, everybody in Europe, everybody in the US, everybody in Asia, because it's a full 24-hour day. If we only look at a 5-minute candle, it's only looking at a 5-minute candle. It's not catching everybody's emotional states, and it's only catching one small section. So look, a lot of people use it with some kind of success. 5 minutes, I think, would be too small. I do have some students who apply on a 15-minute candle, and they get reasonable success out of it. For myself personally, I don't do it. I look at absolute minimum would be a 4-hour candle. I tend to do the daily only because all the things that I need to do in my job, it doesn't give me much time to look at charts these days. So I look at my charts once every morning, and that's it until the next morning. Any other questions? No, we're all a little bit quiet today. Well, I hope that your trading is going well. If you are newer to the classes, what I urge you to do is throughout the week, if you have questions or anything that pops up, bring them in, ask them, and I'm more than happy to help you. Alternatively, you can email me and any specific question, I'm more than happy to help you. Someone's asking me, how do I stop myself from overtrading? Do you mean overtrading as in placing too many trades into the market, or do you mean whilst you're in a trade, doubling up on your positions? In either case, the answer is your trading plan. Okay. See, for example, in my trading plan, it may say, like when I do a trading challenge, and I haven't done one. I've been asked many times, when's the next one? When's the next one? At this present time, I basically have no time for it. Okay, so the best I can do is, if you guys will want to use the daily call chart of the day and the trades that I post up as your trading challenge, I'm more than happy to go through that with you. Okay, but basically, when you in the trading challenge, there is an exercise and a step there that basically you need to stipulate and specify the time frame that you're going to trade, how many currency pairs you're going to trade, which are the currency pairs that you're going to trade, and you'll find that when you define that, it will limit the number of trades that show up for you. Okay, so if and based on your method as well. So for example, if you say I'm only going to trade an inside candle in a counter movement method on support lines, triangles and channels, and I'm only going to do 8 currencies and a daily chart, you'll see that straight away you won't be over trading, because as long as if you're meeting those rules, you will not be over trading. Okay, so specify your rules, write them down, and then make yourself accountable to them. That's the easiest way. Okay, guys, if there's no other questions, let's wrap it up for this week. Watch the daily call. The more you guys watch it, if you had feedback, I'm more than happy to hear from you. I'm trying to identify the best setups that I can so that we can all benefit from them. So enjoy that. Watch the daily call. Have a great week, and I will speak to you next week in our weekly class. Bye for now, guys.